Welcome to ABC Bullion's 360 Weekly Wrap. My name is Crystal Thibios and I am joined once again by our precious metals expert, Global General Manager at ABC Bullion, Nicholas Trappell. Nick, what did you see this last week in precious metals?
We saw an influx of metal coming in from new longs. We saw about 1.4 million ounces of fresh buying in the managed money sector that, according to the figures, up to 7th of December. Now, the price went up to just short of the 50-day moving average, just went over the half of the distance between the November high and the November low. So quite a good bounce, quite a good retracement, clearly lost some energy and faded a little bit towards the end of the week. Positioning wise, open interest declined by about 700,000 ounces. So it looks plausible that about half the people that just entered, or the equivalent of half the people that just entered, also exited, having sort of maybe had a reasonable performance off the 1763 low. Okay. So what I would say is, in terms of targets above 1826, I'd say there's good targets back to 1887. Maybe even beyond that to 2000. Oh, nice. Yeah, it's quite strong targets. Yeah. In terms of resistances, had a resistance around about this level, 1846, 1847. Obviously, we're right at that point. And then going beyond there, looking up to sort of 1908, 1885, 1908, areas that gold has to do some work to get through.
Yeah, it's a fantastic bounce back though.
It's a good bounce back, yeah, definitely. And at the same time, perhaps it's a little bit of a reflection of, what a big drop it was as well. It was a powerful drop, often gets a powerful bounce. In other markets, crude, it's worthwhile just looking at elsewhere at other asset markets. Yeah. Crude almost made a target of 53, so it's done really well. I notice it's also just stopped at the 61.8% Fibonacci retracement of the move from January highs all the way down to the April lows. Be really interesting to see what crude does next. Pay attention to it. It kind of ought to sort of run out here, even though there's plenty of bullish news out. But look out for it anyway, just if only to prove whether I'm wrong or not. Equities had a slightly weak close. If you look at the S&P last week, nothing really overly dramatic on chart-wise. Has got quite close to a major target though. I think within about 1% or so of one of our major targets. So it'd be interesting to see how that weakness plays out through this week and through the rest of the month.
Oh, nice. And what about silver?
Look, silver, positioning-wise, nothing really changed on the net basis. But if you look at longs and shorts individually, they both grew longs grew at something like 8.5 million ounces, shorts grew just over 8 million ounces. Okay. So net looks like nothing happened, but both longs and shorts are gearing up their positions, their bets, either for or against silver. Now, in terms of the price has sort of been bumping up against resistance from the daily cloud, kind of went well into the daily cloud. It's now fallen back out of it. Short to medium term, that's a little bit negative, but above, say, 24.30 actually, I would say there's scope for silver to rally back to 25.5, but above 24.30, below 24.30 even, I'd say the case for silver weakens somewhat.
Okay, and the Aussie dollar?
Aussie's it's achieved pretty much all of the targets that we've talked about lately, up to sort of 75, 60 and 70. So it's done well. The really interesting thing is that we've had great prices for iron ore. I think iron ore went up to $160 a ton. Wow. At $160 a ton, the Aussie dollar is going to do well. Yeah. Now, there are a couple of things about, I suppose, using iron ore to underpin the Australian dollar. One thing is the Chinese market has consumed year to date more than 100 million tons in excess of what they consumed last year and the previous year. So, the sheer demand for iron ore is extraordinary. Where will it go from here? We've just hit this 161 target, more or less. Got a target going back to October, was created in October, goes up to 174. So just from a purely technical point of view, and given the huge demand, there is scope for iron ore to go higher, and therefore give a further bid underpinning to the Australian dollar. Okay. The only thing is and I'd expect that to continue. There's no reason to expect otherwise. Obviously, Chinese steel manufacturers are screaming blue murder about this, but what can they do? There's very few alternatives. Brazilian iron ore supply is constrained, and it's not very easily substitutable. So putting that all together, I expect the Aussie to remain firm, notwithstanding the resistance we've talked about just above here at 76 against the US dollar. Last thing I'd say just about the Aussie is last week, I think, was a little bit of history. 3-month Treasury bills, Australian dollar Treasury bills were auctioned off, and for the first time, some of the people winning that auction actually ended up paying the Australian government to lend them money, to lend the Australian government money, because they got those bills in at just a tiny negative interest rate. I think it was like -1 basis point, but that's the first time in history.
Okay.
So I expect in all Aussie dollar to remain firm, but that looming resistance at 76. Let's see where we go with that.
Awesome. Thanks so much, Nick.
You're welcome.
And thank you for tuning in. For more information, please follow us on our socials below or subscribe to our YouTube channel. Happy trading at abcbullion.com. Until next time, thank you.